Welcome back to Dinar Current, the channel, everyone. If you've been tracking the developments around the dinar and anticipating a major turning point, today's news might just pique your interest. We've got a significant update coming directly from an official Iraqi government source. The Central Bank of Iraq has made a notable decision. The official exchange rate of the dinar has been changed to 1,300 Iraqi dinars per US dollar, a shift from the previous rate of 1,470. At first glance, this might not seem like a massive change, but for those closely watching for signs of a potential revaluation, RV, or reinstatement, it's a meaningful development. Before we explore the possible implications, let's break down the details. According to a report from Shafaq News, this announcement was made by government spokesperson Bassem Al-Awadi, who confirmed the new rate as part of broader economic reform plans. The recently approved budget includes this revised rate of 1,300 Iraqi dinars per USD, meaning it's not a temporary fix or rumor, it's a formal component of Iraq's financial planning for the year. This adjustment aims to tackle inflation, boost economic confidence, and improve transparency across Iraq's financial systems. Looking at the bigger picture, some analysts interpret this move as a signal that Iraq is gradually working toward a more robust and stable national currency. For global currency observers, and especially for those holding dinar, this could be a step in a much larger process. This isn't the first time Iraq has altered the exchange rate. Back in late 2020, the dinar was devalued to around 1,460 per dollar as part of an emergency financial strategy. That shift was a setback for many. But today's upward adjustment to 1,300 could mark a turning point, possibly the start of a long-awaited appreciation trend. Is this the beginning of a revaluation? Could this move indicate the early stages of a full revaluation? Iraq has been under increasing international pressure to modernize its banking and monetary systems. The U.S. Treasury and IMF have been closely working with Iraq to introduce tighter anti-corruption controls, adopt digital payment platforms, and align more closely with global financial standards. Recently, Iraq took a significant step by limiting access to US dollar auctions for 14 private banks over concerns tied to illicit activity, including dollar smuggling into Iran and Syria. These actions aren't just about halting criminal behavior, they reflect Iraq's intention to meet international expectations and rebuild financial credibility. Such developments often precede major currency reforms in other countries, suggesting Iraq could be following a similar trajectory. Strong oil revenues and economic diversification. Another encouraging sign is Iraq's improving financial position. Oil revenues are surging, foreign reserves are strong, and there's a clear effort underway to diversify the economy. Combine that with ongoing implementation of electronic payments, and you start to see the structure forming for a more globally respected and stable dinar. For years, many in the dinar community have argued that Iraq couldn't undergo a revaluation without proper systems in place. Now, those conditions are slowly materializing. What does this mean going forward? Let's be clear, moving from 1,470 to 1,300 is not the revaluation we've been waiting for. It's a controlled adjustment, likely with input from the IMF and other global financial authorities. However, it's a clear indication that change is happening. And change means momentum. The contract rate, the international rate, or what many refer to as the RV rate, hasn't been officially announced. But if Iraq is serious about integrating into the global financial system and shaking off decades of economic instability, strengthening the dinar could very well be part of that long-term vision. This latest rate change might be a test move, a way to assess market reactions, reduce inflation, and send a message of confidence to global investors. What to watch next? In the coming weeks, here are the key signals to monitor. Will Iraq introduce more reforms connected to this rate shift? Will the Central Bank of Iraq provide further insight into future exchange rate policy? Will there be an increase in dinar usage domestically for salaries, contracts, and trade? Each of these steps would point toward a deeper monetary reform agenda, and possibly, the groundwork for a revaluation event. What's your take? Is this a small economic adjustment or the first real step toward an RV? And if you're holding dinar, does this make you feel more optimistic? If you found this breakdown valuable, please like, subscribe, and click the notification bell so you don't miss any future updates. We'll continue to cover this story closely, and as always, we'll help separate facts from speculation. Thanks for tuning in. Stay alert, something major could be developing on the horizon.